going forward.
Thank you very much for that. It's time now for another corporate conversation. CMS Info has reported a good set of Q2 earnings. Revenues up 27% year-on-year. The company's reported margins of 28.5%, an improvement compared to the margins same time last year. To discuss the quarter gone by, we're now joined by Rajiv Kaul, the Executive Vice Chairman, whole-time Director and CEO of the company. Mr. Kaul, morning. This is Rima here. Smart improvement in your margins. What led to it? And do you think there is scope to expand margins from the current levels of 28.5%?
So just for your viewers, we listed the company on December 31st, 2021. So we've been listed for about 10 months. As a company, we are on a transformation journey from being primarily a cash logistics platform in 2015 and trying to build a business services platform. I think we are doing well on that journey. We have now cash management as 65% of our revenue. Our managed services business is scaled up very well. And I think what the story and both the growth in revenues and margins is really a testimony to the fact that we are looking at vertically and horizontally expanding our business. And that journey is going on very well right now.
Okay. And the outlook on margins, sir?
So, we don't have a margin guidance. I think what we have given since we've listed is that we have an FY25 revenue guidance, which is to double our revenue from our FY21 base. Our FY21 revenue was 1,300 crores. Our FY25 revenue target is roughly about 2,600 crores, which is we are aiming at an 18% CAGR in revenue growth over these 4 years. As of now, we are tracking a little ahead of these numbers.
Okay. Just going by your presentation, you are at the moment the largest cash management company in India. We do know that. And you have about 150,000 servicing business points. Just trying to understand what kind of addressable size do you see in terms of an opportunity? How much can you grow your servicing business points, your distribution, and what would that mean for your growth going ahead? Because you spoke about your revenue potential, but even in terms of margins, right? I mean, it stood at about 25% for FY22. Is this something that you can maintain?
So, if you look at our margin profile is best in class globally in our sectors in which companies we compete with. I also like to explain that this is almost in line with how you see IT services companies, large ones in India. And that's the whole goal of our company and the business is to build a platform with a strong margin profile, doing high quality end-to-end outsourcing contracts. We primarily work with banks and also in the retail and e-commerce sector. From your question on the business points, if I look at the addressable market, which we are focused on today, and I'm not talking about our expansion in the future, across both the ATMs and organized retail, we think that addressable market is almost close to 1 million as of today, right? A lot of it has still not yet been outsourced by the banks and in the retail sector. I think so we feel that our business points, 115,000, have still a long way to go over the coming decade. The other metric which we track, which I think is also more relevant for your viewers, is the number of activities we do. So when you think of a logistics platform, which is our cash logistics business, and you try and compare it to other logistics companies you'll track, it's relevant to look at how many activities, akin to how many shipments you're doing, let's say. And that activity is growing very well. In Q2 of this year, we did 4.7 million activities, so roughly 47 lakhs, which has grown 6% Q-on-Q and about 11-12% year-on-year. So we're seeing a lot of resilience in cash usage in urban India, especially in the last 6 to 9 months. We are seeing as mobility, as people are again back to movement, going to offices, and commerce has picked up, we are seeing urban cash growth almost on a 23% year-on-year.
All right, got that. Hi, Mr. Kaul. Thanks for joining us. This is Pavitra. So you spoke about your cash management being around 65%. Can you also take us through what do you think is the growth potential for the ATM business, and how much do you expect that to grow and contribute? Also, this 65%, do you think this mix is likely to stay the same, or are you looking to increase the cash management?
So I'll start from the last question. Yeah. So our mix was roughly 100-0 5 years ago, 6 years ago. It's moved to 65-35 as of this quarter. Our goal was to hit 65-35 by the end of FY23. And our FY25 goal is to have 60% of our revenue from cash management and roughly 40% from our managed services platform. As of now, again, I think basis the order book, again, I think I should talk about our order book. We have a very healthy order book. It has expanded by almost 600 crores in first half of the year. We have almost 2,800 crores of order book on hand to execute right now. And that gives us a very good visibility and predictability when we think of our FY25 numbers and metrics. In terms of the ATM market and the retail market, I think they are growing very well. For us, we would like to see how this entire year goes, because FY23 would be truly the first year in 3 years where we hope that this would be COVID-free, and therefore would become a good baseline to track on an annual basis to see how this can move forward. Because right now you'll see a little lumpiness, given last year in Q1 there was a pretty serious COVID impact. Q3 had Omicron impact in the economy, and therefore I think we will pause and wait till end of the fiscal year to be able to give you some directional path on what we think the growth opportunity is for the next 5 to 7 years.
So that's, of course, for the next 5 to 7 years. But just coming back, you said in your managed services business, which is 40% of your book right now, you spoke about your new order wins at 600 crores in the first half, and that's something that you put in your presentation as well. But I noticed that you're also conducting pilots with some new customers in both banking and the NBFC space in remote monitoring. What kind of potential do you see here, and what's the visibility in terms of order book? Can you do this same 600 crore run rate in the second half as well in your managed services business?
Excellent question. I think we incubated a new business in AIoT, which is an IoT business with machine learning around remote monitoring 18 months ago. This business has seen very rapid growth. We've had a very good adoption of our technology amongst the banks. We started our focus primarily from the ATM base to automate the whole security infrastructure for that. We have right now gone live at 18,000 sites. This is one of the most rapid and faster growing IoT deployments in the country across any sector. This was zero revenue last year, and we are hoping that this business will hit 100 crore annual run rate in this fiscal year itself. So I think that's one business in which we are now expanding the use cases from ATMs going into bank branches, looking at vaults, looking at gold loan companies, looking at insurance companies and NBFCs to see if we can expand the deployment of our IoT business across sectors. Our first focus remains BFSI, because that's where we have the long-term relationships and we have a very good understanding of the customer needs. But over the midterm, we will look to expand across and make it a more horizontal play.
Just one final word. The cash management business in India as well as globally is increasingly becoming more consolidated. Scale promotes higher profitability. Could you tell us what your market share is? Would you look to make some acquisitions, increase your presence here?
So scale absolutely helps grow and maintain your margins and maybe grow the margins. But the caveat is that you would need to have a very robust technology infrastructure to do it. Because cash management, I always have said this for the last 10 years, this is a risk management business. Therefore, you need to manage risk very well. It comes down to how much of technology, how smartly you're using technology to predict and prevent any issues out here. From a consolidation perspective, it's therefore an industry which globally has consolidated. India has seen its ups and downs. When we started the business 12, 13 years ago, there are 4 players. It quickly expanded to 8 or 9 companies. And now there are 4 to 5 companies in the sector. We think this should consolidate because it will be very difficult for people to manage this business as it grows in the country. Are we an ideal buyer for these companies? I think time will tell. I think we are, as a management team, very focused on pragmatic and value-oriented M&A. We have built up a very good market share profile. We have the network and reach. Therefore, buying a company for growth is not really something which we are quite excited about. We rather use our capital to expand into other sectors. But if there is something which is available at a good price, we of course will look at it.
Thanks a lot for joining in. That's CMS Info Systems. They've had a dream run, actually. The stock has done really well, and the earnings have also looked pretty good. By the way, for the market, the buy on dips is working beautifully today. The Nifty is almost in the green now, and so is the Sensex. The mid-cap index is up over 100 points, and a lot of big movers. Federal Bank has once again hit a fresh high, so that's the stock of the moment. Up 65% this year and up about 3% today. So we'll talk about all this and more on the other side of the break. When we come back, Himanshu Gupta of Globe Capital will be with us to give us some top trading bets. Stay tuned.